Well, guys, we've just witnessed an A-plus result for one of the best stocks in the world, but as Wall Street likes to do, it's sold off after hours. So what gives, and should we be paying attention to this as we see the potential for another double bottom pattern on the S&P 500? Is a big move just around the corner? Well, in today's video, we'll take a look at the biggest options flows, dark pool liquidity, and of course, the fear and greed index for the crypto markets. It looks like maybe a few people are getting a little bit too greedy. So today we break down whether we can still go higher or are we in for a little bit of a pullback. Join us as we cover stocks, commodities, and cryptos in today's daily show. This will be a good one. It's not to be missed. Well, welcome back everyone to the Daily Show. My name's Tom, and in today's video, we've got a lot to cover. So let's get into it straight away. Remember to subscribe and hit that bell if you love markets like we do. We cover them every day here on the show. So let's begin with Bitcoin. Everyone loves crypto right now, and rightfully so. There's some great stats, post-election pumps. We also have, of course, strong September as a stat we've been talking about for a long time now, leading into October, November, and December generally being positive. But this is also leading into extreme greed. In fact, the crypto fear greed index has just gone back above 90. Similar reads, such as these two over here, were the toppings of those markets. But there was one wrong read, and that was post the US 2020 election. We'll notice here that when we got into this particular fear greed kind of readout, we ended up going into what's called a pit or a pullback in time. Are we due for the same thing now in cryptos? Even though we think that Bitcoin's going to 120 to 130K, could it be finding a little bit of weakness around here? Well, obviously it's what we call a dull market, and that makes it very difficult to short. We certainly wouldn't be doing that, but there still could be hope for people trying to get into a bit of a rally on Bitcoin later on. And one of those hopes comes from the outflows. Yes, we're starting to see outflows again on the biggest Bitcoin ETFs, and that's just so happened to correlate with quite a lot of transactions that we're seeing occurring on the coin. Now, we know that, of course, the post-election pump is the real deal. And if you're a long-term hodler, someone that's looking at weeks into months, I don't think there's much reason to be concerned at all. In fact, things are looking absolutely exceptional at this point. And of course, MSTR is helping to broker all this hype into that industry. But on top of this, we're starting to see large transactions coming through. Are they accumulations? Are they distributions? Now, we could argue some of them have actually been accumulations as we're seeing a kind of a price correction here, such as coin, such as MSTR, such as some of the ones we've talked about recently. But we continue to see huge transactions after those big moves. Are Wall Street late to the party and just starting to get in? Is this some kind of sell? Well, you'll have to kind of decide this for yourself because it is quite difficult to read. But as we saw recently, all of these huge dark pools in MSTR have led on to further and further gains as this becomes possibly the hottest stock in the markets right now. It's already in the top 100 in terms of size, passing through $100 billion, I believe, over the last 24 hours. Or if it didn't, it got damn close as Michael Saylor literally just ramps up the ability to create effectively a printing press inside of MSTR. We'll keep talking about this because I think it's going to be one of the most interesting trades and interesting investment concepts over the next coming kind of year. And also we saw Mara, as we announced yesterday, that it was getting into it. And guess what? Opened up a little bit positive, ended the day around 13%. I'm not saying Mara is the same deal, but you can see the hype. It reminds me of 2021 in many ways with the hyper growth stocks and all of those types of things. Regardless of this, huge transactions are coming through. And whenever you get movements this big, it usually means that if you're riding the train, cool, but you have to expect like a click of a finger that this thing could drop anywhere from 10, 20, 30%, and it could do it very quickly. Of course, it's all going to come back down to Bitcoin price as part of the storyline. We're going to keep following that. We're not doomers on this at the moment. And obviously, if you're one that's going to be holding it for a little while, 120 to 130 has a very good case scenario for it. Let's now talk about the S&P 500 though. Let's come back here to whether we're in a further pullback and some form of ABC style pattern in terms of Elliott wave, basically dropping, coming up, and then dropping again. Well, that could, of course, be possible. We have seen the percentage of stocks above the 200 and above the 50 both drop. And this is from David Keller. I also like this particular indicator. And what it shows us is that the market breadth in many ways is actually declining. Now, of course, there are counters to this. I posted this particular chart over on X. Make sure to follow us, links in the description down below. And the real argument is, are we seeing some form of double or triple bottom once again? Whenever you see a nice coiling pattern, if it does break to the upside, that's a great sign for the bulls. Obviously, if it breaks towards the downside, we could be looking at a similar length type of sell-off, which guess where that puts us, everyone? 5,700. Now, I'm not saying it's necessarily going to 5,700. In fact, the action on the market looks mostly bullish. But of course, we did just see NVDA release its results, and the market was like, yeah, we expect even more. I don't know how you could expect more out of a company, but this is the valuation, and this is, of course, how Wall Street has been pricing things. In terms of seasonal weakness, it's pretty normal to get a little bit of weakness here in November. And as per this chart from Grant Hawkridge over on X, you'll notice that historically, once we've gone down this little dip around the 20th and 21st in terms of November, we tend to see actually a very strong long-term run through the last kind of 10 days in November. In fact, they're some of the strongest of the year. So will we get that again? Well, there are so many interesting things that are going to be occurring on the markets over the next coming months. Most notably is going to also be performance, and performance of the market over the next 12 months can often be found, just like we did at the start of this year, from this reading from Wayne Whaley. We do love the toy reading, and we will have those results for you guys by January 19th. The way that the market usually reacts between November 19th and January 19th has huge implications to the next 12 months of results. And I'm excited to be sharing those with you very, very soon. Let's move now over to Treasuries for a moment. Now, Treasuries saw one of the highest outflows that we've ever had. This is a huge deal. And whatever the reason for this was, we saw like a big movement, of course, to the downside in Treasuries. Price action itself is still holding up. Now, really, it's going to come back down to yields. And again, Wayne, with some great data here, found that there is a 218. So that means 18 in the direction of this reading, and only 2 failures when it comes to 30-year bond yield setups from November 15th to 26th. Now, this is a very interesting thing. What you've noticed here is we tend to see yields across the board dropping. Now, that's a pretty big deal because that could mean that Treasuries is actually also about to see a turn. If we go back to this chart over here, you may notice that when Treasuries got dumped super hard, we ended up going up positively. Remember, you often want to be going against some of these huge moves. We've already detailed that a few times when it came to China this year. It's still to be determined by price action on Treasuries. Don't go and make guesses and all of those types of things, but it's a good first sign that things might be improving. Wow, I'm not sure how this went green in the background, but that's pretty cool considering it's NVIDIA. So NVIDIA revenue by segment, great chart here, shared over on our X account. You can see that things have been, of course, steadily on the improve. No wonder NVIDIA has been absolutely blitzing it. Take a look at that. There is no joke when it comes to data center. And obviously, the gaming revenue is still growing, but really, this is just huge. I mean, that's a big deal. Let's read out some numbers here. Revenue plus 94% year on year. Data center growth 112%. Gaming plus 15%. Pro visualization plus 17%. Everything is improving across the board. And the EBIT is plus 110% with a 62% margin, up from 57%. So look, was it a bad result? No. Will Wall Street do whatever it feels like doing? Sure. But if you're a long-term hodler, you can't hate what you saw in NVIDIA. Overall, it's an incredible result, and really to live up to such expectations is a pretty good deal. So what that means moving forward is that NVIDIA is still the leader, NVIDIA is still the best, and from that perspective, eventually it's going to probably break 148, 150, and then start to rival up. I wouldn't be surprised to ultimately get upgrades off this from some of the guys in the street, and eventually we'll hit that 170, 180 target that we've had for a while now. In terms of market cycles, that would make sense as well. AI drives this market at this point, although MSTR is starting to drive a little bit of it. And of course, we are pretty much smack bang in the middle of a normal bull market cycle. So nothing to be fearful of just yet. Target earnings were a disappointment. NVIDIA didn't quite move the 7.8, moved about 4 to the downside before getting a buy up through the session. And obviously, we still do have earnings coming in for the end of the week. Couple of other charts I want to share. Obviously, we had gold getting a pretty good read in it the other day, leading us to turn bullish on it. And I did want to share another dark pool liquidity action because we just got our first dark pool, actual dark pool, not just large trade, coming through FXI. Now, it's a pretty big one, and you know I like these types of things. So as we're basing here in Chinese markets, as everybody hates them, like they hated crypto back at the end of September, you know, you've got to start saying, well, things are starting to look a little bit better. From a 5-day run, gold is now the best. Check mark, that's awesome to see. And from the last 24 hours, solar coming back into focus, which is interesting because that got heavily sold off. I will note, though, that energy has just slowly melted up every single day pretty much since the US election. So energy stocks have actually been going up regardless of oil jumping up, down, and all around. Now let's move over to price action and the S&P 500 and of course the options flows segment of this show. And first up, we are starting to see a very interesting kind of market dynamic here. Now you'll notice that at the time of this recording, futures are down, but they're still holding in this range. And obviously we don't mind having a little bit of consolidation, especially at a base. Now there are two arguments. The first one is of course something like this, which means another leg down, kind of like a ABC style to the sell side, which could get us as low as the gap fill or even the possibility of a 5,700. We're not seeing those signs just yet, and we remain positive with the data that we've shared with you guys over the last weeks and months because things are still looking really good into the end of the year when you look at the markets. Have we broken to the upside? Not quite yet, but from the perspective, that's on the real market, but from the perspective of the futures market, let's take a look at that. 2 weak rejections to the upside, pretty strong. And even the sell-off here, it's not like it's breaking below here. But what we can do is we can start to say, well, if we break into the middle of these zones, anywhere between 58.50 and 58.30, if we close below those areas, I don't know if there's much that's going to stop it before these anchored VWAPs and, of course, the supports down at 5,700. So we must keep an open mind that this is probably our worst case scenario should it take the lows. For now, we think that we've hit a very good level. Things are looking bullish, but let's jump on over to the options because they often do help us. And what we started to see coming into NVIDIA's earnings were way too many people adding into calls. We now have huge call walls at 59.35. We break those, you guys know what it is. It's positive gamma time and it's dancing for the bulls. So that will be an important area, but I am starting to see again a little bit of 58.50 put stacking, which is going to help the market find support. It kind of looks like the next couple of days, the market would like to stay in range and continue to do this little pullback in time. But if we break either way, you can kind of see the aggression of both the puts and the calls. So 59.35, a very important point for the call side for the bulls. And at this point, around 58.50 is the important side for the put wall. So that is where we expect the markets to find buying pressure. When it comes to Tesla, it seems like we're pretty much still fighting with 350. We are in positive gamma, so of course it can start to flow upon itself. And at this stage, you wouldn't want to be negative on Tesla, at least in our opinion. 150, too much for NVIDIA for now. We'll see how it ends up trading the day after, because of course we've only seen after hours trade, but we break through 150. And yeah, that's a huge breakout. Do not lose sight of this. It's not just 150 for this week. It's 150 for next week. And it's 150 for a lot of, even December is 150 pretty much as a key level. So keep watching that, guys. Let's jump on over to the charts. US 10-year, you can see here, still kind of holding its own. So no real concerns there. High yield junk bonds continuing to look pretty good. So that's a great sign for the markets. And the American consumer in general looking okay on the charts. Along with home builders, there's no real underlying concerns except for some stock sectors doing worse since the election, notably biotech, solar, healthcare, RFK Jr., I guess, having a huge effect on those markets. Although we do still think they'll come good, but they're getting absolutely shellacked in the last couple of sessions. The US dollar seasonality weakness has started to potentially show itself. We're still seeing an upward trend. We haven't broken below this level down here. And of course, we're still holding this high. So we'll see how this plays out. I've got a few alerts telling me that it's maybe a little bit overbought for now. So it could be a mixture of consolidation and then a breach to the upside, which will create quite a large move, you would have to think. or it could be weakness, but we will find out. Once we get the evidence in hand, then we'll be able to make a better call on it. And that's what trading is. It's about having the patience to get the evidence in hand, then enacting on your, of course, not your hunch, but in this case, your data, your TA, and everything else that you're applying to it. It's about trading the human psychology in many ways. Copper still looking pretty good on the charts. Obviously, HSI still floating within the range. This is basically FXI. So we're starting to see a little bit of accumulation. Break to the upside, 19,850. It's going to be a good kind of result there for the Chinese stock market. Gold continues its way higher. Love it. Great work, gold. It's come into its first resistance zone. So I would expect a little bit of selling here and then hopefully further strength. Next in line is 2,700. And generally speaking, pullbacks we believe will be bought up from gold at this point. Silver doing the same type of thing, finding resistance at the daily 20, sold off, looking for that to find bullish pressure. When we move over to UK oil or US oil, it still looks bullish on the small time frames. Pullback would be okay, 72 a barrel, maybe bull, question. Certainly something we're looking at, but just remember they're kind of trading differently. The barrels are trading that way, but take a look at energy stock. It's just a melt up. That is a dull market, which is basically a slowly grinding up market. You don't want to short that, that's for sure. Do not short that market. In general, this is how you just grind higher over time. And you do not want to go against these types of grinds, but it is still strengthening just like slowly each and every day. Tesla, you'll notice, is trading just underneath 350 call wall. Obviously, it breaks that upside. It's going to look good. Looks fine on the charts. And NVDA, probably going to open somewhere around 2% down. It did go 4+ and then was bought after our session. I don't think there's much to be concerned about. Really, the stock looked pretty good. The guidance looked okay. Okay, yeah, it's not exactly the 10 out of 10 that Wall Street wants, but they'll get over it, and that's just the way it is. So generally speaking, we're looking at pullbacks to be met by buy demand, we would think. I always say the same thing with NVIDIA. $100 trillion. That was the amount of CEOs at an earlier meeting this year. I wouldn't go against $100 trillion of CEOs clamoring to get those chips, and they want it bad. US 2000 looks excellent. Actually, beautiful day trade to the upside here. Love to see a new high. Again, showing us that the internal structure is still okay from price action. Let's see if it can hold up. Not too bad there. NASDAQ also a beautiful day trade on this. Let's see if it can hold. Again, new high. This is a good entry down here in these lows. So things are starting to creep up there. Now let's move over to everyone's discussion. MSTR. Wow. People love this thing. Rightfully so. It's a very interesting credit creation. I'm sure eventually something is going to go wrong with it, but you've got to remember that people are hype train USA on this one. And I mean, they're hype train. Look at this. It went up another 6.51% before dumping back down. Saylor is just printing and creating basically new issuance every single day at the moment. Why wouldn't he? I don't blame him. So in this case, do I think it's detached from reality? It looks like it on the charts, but I wouldn't go against it. That was the first little sign of weakness. You'll notice I've got some concerns about it at these prices. I don't actually have that much concern for it during the Bitcoin run. It's when Bitcoin goes bad that you'll really want to be concerned. But remember, the fund did somehow hold through a 70% drop. So there's clearly a new method here. A lot of these bonds that are being presented as well have 2029 expirations on them. So it's not like they're at call anytime soon. So this is a huge move. Whenever you get moves of this type of size, I always caution people from jumping in on the FOMO. You might get a quick 10 or 20% possibly, and then think, well, I'll be the first one to get out. But yeah, you often are not. So I always go back to, let's have a look at Bitcoin and see what's going on. So for now, it is a dull market. We still maintain 120, 130 next year. Some people think it's going to come by Christmas. It's possible. Who knows? It's Bitcoin. But yeah, trend is still up. It's dull. Altcoins certainly weakening, like our call on Ethereum here to the weak side, continuing to show up. I haven't looked at Solana yet. Let's do that together and just check it out here for a moment. So Solana also, showing that weakness, which is fine. That's exactly what you would expect based on the current price action. Bitcoin doing better than everything. It is the king of coins. We do love Bitcoin. I'm a bit of a Bitcoin maximalist in the crypto world. It's the one I tend to get the most. But overall, I think that it's still starting to detach from some of the longer term means. It can do this for a long time though. So just say, like, if you're holding for months and weeks, it doesn't really matter. If you're looking to get back in, it's probably not the best time to buy when it comes to crypto. And that's coming from someone that's very bullish on it still. I think there is a chance of a pullback down into maybe the low 80s. We'll see whether it can occur, but we're starting to see like a overwhelming random evidence of people taking a little bit of profit, whether that's on MSTR potentially, whether that's on coin, maybe that's accumulation, we'll see, whether that's on outflows. It's all of those things that do join concerns. When it comes to news, just wait till Friday. We've got PMI pretty much from everybody's perspective. That's really the only main bit of news. We've now seen NVIDIA's earnings. I would say overall fine. Market structure will dictate everything. And at this point, we have to believe that the market is still towards the upside. If you enjoyed today's video, make sure to subscribe, guys. We'd love to see you in the next one. Follow us over on X as well for all of our latest charts and stuff we're posting there. Check us out on LinkedIn. And obviously, if you love Black Friday, check out our Black Friday sale. Come and join us in our Market Masters Club where we do all the private streams. And, I just wanted to say this. I had someone message me yesterday. He's been holding MSTR thanks to our crypto analysis since 15 of last year. $15, that is. And let's just say he's done all right. So congratulations to him. But the biggest thing here was that he had commitment and the confidence to hold the position, okay? And that's the difference between a successful trader and investor and someone that has absolutely no idea what they're doing. You've got to know when to hold them, and you've got to build the evidence to have the confidence to hold the position. And obviously he started to descale, which I don't blame him for at these levels. I think it's fine. The other day he started descaling. But this just shows you again that it's about that type of commitment and confidence. And you have to build that yourself through understanding cycles, through understanding the data, through understanding the human psychology of markets. I hope that each and every one of you are kicking some ass in these markets. Obviously, it looks like everything's gravy and great. But in 2025-26, you never know what's coming next. Make sure to subscribe. We'll see you in the next one. I thought I'd leave you with that message. Bye, guys.